We're going to talk today about something that I think is a huge inefficiency and something a lot of business owners don't know or don't understand, and that's healthcare spending accounts or HSA. We're gonna talk about that, and we're gonna dig into the details. Where do you want to start, Christina?
Okay. Well, I definitely think these healthcare spending accounts are important to talk about. They're underutilized, and I think it's just because people don't know about them. So that's what we want to get to. But I think we've got to step it back a bit just to explain how we fit the healthcare spending account into the overall plan for business owners' health plans. So I'm thinking we should start on the group insurance side. And I know you actually started in group insurance. That's where you started in this business. So I am 100% sure you have seen a lot of these tax inefficiencies and setups throughout your time doing group, but maybe you could start there for us. Give us a little bit of a rundown on group and go from there.
Sure. So a healthcare spending account, just a great way to get money out of your company tax free or tax efficiently. And we'll get through the details. But you kind of got to understand group insurance before you talk about healthcare spending accounts. And as Christina said, I actually started in this business in the 1990s in group insurance and pensions. Um, Graduated from my MBA and went to London, Ontario for the summer for training. And then like the last week, PowerPoint was big back then, brand new, and it was like Darren Mitchell is going with work with this manager in Burlington, and that was a Thursday, and I had to be there Monday, and I had to fly home, get my stuff, and fly back, and I didn't have much stuff. It was easy, and I remember the first day of the job in Burlington. My boss says, "Okay, I want you to deliver this group insurance administrative kit to this group." And he gives me the address, and it's like, I don't know, 5955 or something, Young Street. And I'm like, well, here I am, a little Nova Scotia kid going, well, I know Young Street, I know that. So I drove from Burlington right downtown to the Sky Dome because I knew Young Street was down there, and I started driving up. Well, now I'm in North York or beyond, and I finally hit the destination, and I come back, and the business says, "Why don't you take the 401, the 427, the QEW?" And I was like, "Oh, I didn't know about that." So I make it back about 8 hours later, and my boss is like, "Where the hell were you? What were you doing all day?" No phones back then, and it was like, so that was my first day on the job in group insurance in Burlington, Ontario. But ended up working in North York, Toronto, a bunch of different places. But group insurance fundamentally is a wonderful thing to attract and retain key employees, and it's good for the owner as well. So group insurance, there's four key parts: life, LTD, health, and dental. We're going to kind of focus on the health and dental portion here because that applies to the health spending account. From a health and dental perspective, it's very tax efficient group insurance because as an employer, you get to pay company dollars for that premium for the group insurance. So the health and dental premium, you can pay for that as an employer and it's a tax deduction. But all the reimbursement to your employees, their health, their dental, their vision, their massage or whatever, all that gets reimbursed tax free. So you're using corporate dollars with tax write off, employee gets tax free money. Well, business owners are most often an employee of their company as well. So now, as the business owner, it's also tax efficient for you. As a business owner, you pay the premiums and you get reimbursed tax free for the health and dental related expenses. The healthcare spending account just really takes it to the next level. And it's like, well, what about all those things that aren't covered under the health and dental plan? Or what about those things that what if you don't have a health and dental plan? And what if you have expenses as a business owner? So Christina, what am I missing here that you want to address before I dig into how a healthcare spending account works?
I think a question that some might ask, as business owners that might be scaling their business and aren't quite at the place to get benefits for all of their employees at once, is it possible for employees to just set up their own plans or their own level of the group plan? Or do they need to get it for all of their employees when they set it up?
Yeah, great question. So with group insurance and with the healthcare spending account, the rules are you're not allowed to discriminate within a class of employees. So you can't say, great, I've got 10 employees, but these are the only four I like, and I'm going to put them on the group insurance plan. or these are the 4 people that really need it because they're sick, and these 6 people, they're healthy. We don't need to put them on. Well, that's not going to fly with the insurance company. That's anti-selection. But you are allowed to discriminate by class of employees. And by class, I mean you could have senior management, that may be the owners. Then you could have management. Then you could have all other employees or union, non-union. You can break it up however you want. So within those classes, you can discriminate by class. So you can have, maybe the senior management has, extra disability and orthodontics, and all other employees, maybe don't have the enhanced LTD and no orthodontics. So you can discriminate by class, or you can just offer it to one class. So even if you had 3 or 4 employees, you could offer it just for the business owners if you classified them as the class senior management or whatever it was. Now, again, you've got to be an employee if you're a business owner, because this is really considered an employee benefit, not a shareholder benefit. Is that what he meant, Christina?
Yeah, that's exactly what I meant. One other thing that we might want to mention as well is you, as a business owner, you don't have to go with the group benefits plan. Sometimes it makes more sense to go with a group benefits plan and setting it up for the executive level, like you said. But other times it might make more sense to set up a personal plan for your family. So you can purchase those standalone plans. They're not set up as group. You actually purchase them directly through the insurance company for you and your family specifically. One in a tax inefficiency we do see happen sometimes with that when people are kind of setting them up on their own, if they're calling that, Blue Cross or Manulife, and getting it set up on their own for their family. They might set it up to pay out of their personal bank accounts. Even though it's a personal plan, it's still a business expense. So if you're a business owner and you're setting this plan up for yourself personally, make sure that you still have it running through your business account, because it is an expense, and that is you don't want to pay personal dollars for your business, your medical expenses at any point in time, which does bring us to the healthcare spending account that we really want to focus on today, right?
Yeah, and I hope we're not making this too complicated. I'll tell you how simple this is. Any health and dental expense that isn't covered by the plan, group insurance plan, or any health and dental expense that's eligible if you don't even have a group insurance plan, can go through your health spending account. So I'm going to give you a couple just real world examples. So the company we use, we set it up for our customers, and it's literally an app on my phone. And the app on my phone, the setup costs $0.00. So everyone should set one of these up if you're a business owner. And you can say, great, senior management, which would really be the owners, let's say they're $10,000 a year or $5,000 or $10,000 a year of benefit. Well, you don't pay that. That's your limit for the year, but you only pay a 10% fee when you use it. So again, setup, we're going to take a picture of my personal bank account, picture of my corporate bank account. I'm going to fill out my name and birth dates of my family. I'm going to send that off to our office and say, great, set this up. And now I might never use it, not an expense. Or give you a real world example. My daughter got glasses the other day. So they were like $400, and our group insurance plan paid $200. So for me to pay that $200, I paid the $200 for the glasses. Well, that cost me $200 of personal money. But with this healthcare spending account that was already set up, I said, oh, well, I took my phone out, I took a picture of the receipt, the $200, and I basically hit, daughter, date, send, and the healthcare spending account company went into my corporate bank account and hauled out that $200 plus a 10% admin fee, and they can vary. So $220, I get reimbursed $200. So it cost me $220 corporately to get $200 to me personally. Now, if I was going to just take that out as salary, I would need to take out about $400 of salary, pay $200 in income tax to be left with $200. So that glasses receipt cost me $210 for the reimbursement instead of $400. So a huge efficiency, no cost to set up. And, CRA has rules on this. They list all the things that are eligible. So it's a black and white. There's no gray here. So absolutely everyone that's a business owner, it makes sense to have this. I'll give you one more example. Back when my kids were younger, they were both kind enough. They decided when they were in grade 7 and 9, Why don't we get braces in the same year? Dad would like that. So both my kids had braces the same year. So it was about $10,000 that I had to pay out of pocket. So again, corporately, I would take about 20,000 of corporate dollars, pay out a salary, net 10, go and pay for those braces. All I did is took pictures as the receipts came along. The end of the day, the effect was $10,000 came out of my corp plus a 10% fee, $11,000 out of my corp, $10,000 to me personally. So if you can get money out of your corp for 10 cents on the dollar, take money out of your corp. So again, no cost to set up. You only pay the fee if you use it. Really no reason why someone wouldn't set it up. So that I talked a lot, Christina. What did I miss and what do you want me to go back and address?
Thanks for listening so far. I'd like to take a moment to remind everyone to subscribe to the podcast and leave a rating on your favorite podcast platform. Hit the button on YouTube, and more importantly, if you're finding value from this content, reach out to us on our website, controlandcompound.com. I think that the examples really explain it well, how you set it up. It's nice having that app on your phone to be able to do it. You know, I use one of these as well. There is that fee that you talk about, but that is what's keeping everything in line, right? This app is making sure that everything is on board with CRA and that everything is being done correctly for your accountant. Disclaimer, we are not accountants here. We are not offering tax advice. We are just telling you what we know, what we see happen where business owners aren't utilizing in these types of things. But this is not tax advice by any degree. These this app and this company that sets it up for you, they're the one that is going to keep you on track with CRA. You know, I've had clients ask, well, how do we know what's going to be approved? Can I put it through and, maybe it come back? The cool thing about the app is it'll tell you if it's not an approved expense. I have a funny story about this. I was at my spa and they had this lash growth serum so I could grow my eyelashes nice and long. And they're like, it's actually medical. It's a medical thing. And I was like, oh, it's medical. I'm totally going to go back and put this through my healthcare spending account. And they were like, no, Christina, you can't have spa stuff in your medical account. So they told me, but you're paying that small fee, but it's 100% worth it. Because it's setting this up and such like the app is so cool. It's so efficient, right? It's a lot different than when you probably would have started your healthcare spending account, Darren?
Well, yeah, I mean, back in the day in the 90s, it was like cost plus, they called it then. Same idea. Business owners could do this, but it was all paper based. It would take 6 weeks. And, for me, the technology has just made it so easy. It was all those little receipts no one saved. You go to the dentist, it's $100. You get reimbursed 70 or 80. It's 20, $30. Well, you pay it. But now I can literally take that small receipt, take a picture, boom. Now I got $30 out of my company for 10 cents on the dollar. So for the little receipts, the convenience of technology makes it easy. And then for the larger ones, again, the tax savings are just immense. Just a couple points too, like Christina, you mentioned like employees can have this, employers could have it. So, sometimes we'll see, okay, senior management might have 5 or 10 grand a year. And then managers might have $1,000 a year and all other employees $500 a year. So you can offer that to different classes of employees at different amounts too. You can offer it just to the business owner. But when we talk about business owner, we got to talk about the right kind of company, right, Christina?
Yeah, exactly. I wanted to touch on this. So important point, Darren. Can you outline the type of company? Like, I know you've got to be incorporated, you've got to be an active business, but maybe go into that a little bit, just because it's not for all business owners. You have to get to that incorporated level before you can start using that healthcare spending account.
Right. And again, we're not accountants. We're not offering tax advice. Please seek your own tax advice. But my experience with this is, the benefit that you're getting reimbursed for, you're getting reimbursed that group insurance money or the healthcare spending of money personally. Well, that's a reimbursement as an employee. So that's an employee benefit. So first, it's got to be reasonable. So in other words, if you had an employee making 100 grand a year, would it be reasonable for you to offer them, a 5% of salary, which would be $5,000 a year health spending account? Sure, that's reasonable. Is it 5, is it 10, is it 2%, somewhere in there. If you have an employee and let's say it's yourself and you're making $20,000 a year and you go, I'm going to set up a $50,000 healthcare spending account. Well, if I was CRA, I'd look at that and go, you're only making $20,000 a year. Is it reasonable to say as an employee your employer would offer you a $50,000 a year benefit? I don't think so. So it's got to be reasonable based upon your income. And again, that goes back to the employee, because if you have a really small income and you're the business owner, can they argue it's a shareholder benefit? Again, talk to your accountant, but I think yes. Or what about a holding company? And that's when, Christine, you have the right kind of company. You've got to set this up, this reimbursement, because you're an employee. That's why you're being reimbursed. Now, you happen to be the owner as well, but you're the employee. So in a holding company where you're not running an active business, you're just a shareholder, we're not going to be able to do a healthcare spending account there. If your accountant tells you differently, again, seek their advice. But typically, active incorporated business, and it's got to be reasonable in relation to income. And that's why typically we have higher amounts for the senior managers, owners, or whatever we classify them as employees. Their incomes are higher, so their benefit amount can be higher. And the cool part is, even if you set it up for your employees, and I've done this, a lot of employees don't use it, and they certainly don't use all of it, and you don't have to pay for it. So in other words, if you have a $500 health spending account for employees, some companies will say, you know what, I'm gonna get rid of glasses. I'm paying X amount for this vision care benefit, and it's only getting $100, $200. I'll just give everyone a $200 or $500 health spending account, and they can use it for massages or anything they want. But at the end of the year, if that employee only claims 100, well, as an employer, you just paid 100 plus 10% fee. You didn't pay the full 500. You only pay as they use it up to the maximum. And that goes back, Christina, to using the company saying, well, how do I know when I reach my maximum? How do I know when the employee reached the maximum? How do I know how much everyone used? Well, that's why you're paying this 10% fee. You don't want to have to try to administer all that and track it as someone over their maximum, et cetera. So active business income as an employee and reasonable. What else did I miss?
One thing also to mention, we say employee, but you can set these up so that their dependents can use it as well. So, spouse, dependents, you can set that up on the plan. And they also have some cool additional benefits that you can add now. I know we added Wello. Was it last year that Wello came out? That was pretty neat. So you see it a lot out there now, a little bit more common. But the online doctors, right? So being able to talk to a doctor on your phone through an app. These healthcare spending accounts do have extra things benefits you can add, such as this. So you add that for an employee benefit on the plan. I think it's like a monthly payment that you pay for the service, but it's a lot less than if you had to purchase it directly through Wello itself. You definitely get a discount putting it through the healthcare spending account program.
Yeah, and there's all kinds of them now. I think like Maple's a big one, and
Yep.
anyway, there's all kinds of them, and you can just Google, online doctor. But again, have some experience with this. And one of my kids come home from camp, and I think 7 weeks or 6 weeks of living in Crocs in the water, little infection on their foot, and it was can't get in to see the doctor for a week. We did this online doctor thing. Within 5 minutes, they called us and said, "What do you have?" And it's, "Oh, we have this rash on a foot." And what do? They go, "Can you turn your camera on?" We took a little video. Here it is. They saw it live and they said, "Oh, this is whatever. It's just an infection. We'll give you a prescription. Where's your pharmacy?" They called it into the pharmacy and we picked it up 2 hours later. So that, instead of waiting 2 weeks to see a doctor. So the ability to do that, again, pay for speed, right? Pay for speed. So if I can pay some money and not have to wait, or, what if you had a prescription refill? You hear people, "Oh, my doctor's away for 3 or 4 weeks. I can't get in a duty clinic. I need to renew this prescription." Well, that online doctor stuff, again, amazing. Now, again, you pay for it. It's a monthly premium, but it's a tax deduction, the premium, because the employer, as the company pays for it. And then, all tax-free benefits when it comes back to you, but not waiting. Oh, man, I will pay money not to wait.
That is huge. And I think there's another one too, the private medicals, right? That we can use this for our private medicals and put through. And waiting for a doctor can be pretty long these days. And if you want to get in and see one, you can put those through as an expense as well, right, Darren?
Yeah. So like, there's some companies, Toronto, Vancouver, Calgary, Montreal, where you can go and do a private medical. And a private medical, a lot of accounting law firms will send all their partners there once a year. And it's not just the stuff you're doing with your doctor. They're going to spend 6, 8, 9 hours 6 or 8 hours, or 4 to 8 hours, depending upon what services. They're going to run scans, x-rays, all these different tests. You're going to talk to, nutritionists and all that. They're usually a couple $1,000, like somewhere between $2,000, $3,000. Great, might not have it done every year, but a lot of preventative stuff. And I've got some amazing stories where, I know people that have done this and found, cancer early on, and it's literally, saved their life, because not something their doctor would have picked up on the regular screening, but they went for these more intensive tests. And again, you're your number one asset. So anything we can do to make you better, well, that includes keeping you alive and healthy. So spending some money on your own personal health, if it's a tax deduction especially, then, great. If that can make you continue to work and produce an income for the next 20 years and continue to be healthy and allow you to do all this, definitely something a lot of people want to look at. And again, we don't specialize in this, but you can Google private medicals. I think you can pay for it corporately. You can use your health spending account. So there's a bunch of different ways you can pay for it. But again, efficiencies. Can we use corporate dollars? Can we use business dollars instead of those after-tax dollars, which is really key for business owners that tend to be in a higher tax bracket. Okay, Christina. So we talked about healthcare spending accounts. We talked about some other things there. But again, we're always talking to our clients about being as efficient as possible, and we're focused on the cash value life insurance and how do we make it as efficient as possible to drive your cash up. Well, there's other inefficiencies that we see business owners do that, again, we necessarily don't do in our office, but we wanted to share in this podcast, because if you're a business owner, you're an incorporated individual, and you say, if I have an incorporation, I can save a bunch of additional tax with these things. Yes, we can talk about life insurance and other podcasts, but this is something we just wanted to share, because this is what we help some of our clients with, and they're all like, why didn't I hear about this before? How come everyone isn't doing this? And I was like, that sounds familiar. It sounds like when people find out about participating whole life. Same thing. Why isn't everybody doing this? I don't know. I think they just don't know about it. No cost to set it up. I think it's pretty straightforward. Anything else?
No, I think we've covered it all today, Darren. We've definitely talked about the healthcare spending accounts and how they can, they can make you a little bit more tax efficient.
Yeah, and we're all about efficiencies. Wonderful. Thanks, Christina. Don't forget to like and subscribe. Check out our YouTube page, TikTok, Instagram. Check it out. Thanks for listening. Thanks for watching. Take care. Thanks for tuning into this episode. Don't forget to like, subscribe, and hit that bell button so you always know when new content is coming out. For more helpful tips and tricks, visit our Instagram, Facebook, or TikTok pages at Control and Compound. If you want to reach out to us directly or work with us, visit our website at controlandcompound.com. The links are in the show notes below. See you next episode.